Hi, everyone, and thank you for joining me for Trading Buddies on this Monday, the very, very, very last day of September, which, of course, my goodness me, I've got a big noise in my ear that I'll have to get rid of. There you go, it's gone. As I was saying, a big end of first month of spring here in Australia. And speaking of Australia, if you're listening to me or watching me from Australia, it is the last week that we will be on at this time due to daylight saving, that curse of a thing, daylight saving, that will kicks into gear. Oh, goodness me, I'm having difficulties here. Sorry about this. That could be better. I'm hearing myself back, and it's very, very disarming. As I was saying, daylight saving comes into practice next Sunday for Australians. I think it's already done for the Kiwis yesterday, so they're ahead of us. So they're always ahead of us time wise, very seldom otherwise. Aren't they, Shane? Very seldom, except when they play rugby, I must admit, which is a bit of a shocker. So this time next week, for sunlight time, we won't be on air Australia wise. We will be this time everywhere else in the world, I believe. God, it's confusing. Righto. Bit of a change today, actually. Ash and I are going to do something that we've never done before, and that is trade 1 minute charts. 1 minute charts. So we're going
Oh,
to have two
wow.
guys trading 1 minute charts, which could be quite interesting. I've actually never done this before. Now, because I've never done this before, I'm not going to actually place the trades. I'm going to call the entries and stop losses and targets, but I'm not going to place the trades. And the reason for that is we don't want you to place the trades or either, because this is very much a trial. We believe it'll work, but we need to prove that before we actually start trading it, which will hopefully be next week. So fasten your seatbelts. We're going to trade 1 minute charts. I'm going to trade gold and the pound versus the dollar. And the method I'm going to use is I'm going to look for an oversold situation, just like we have here. Then I want to see a reversal. So basically trading reversion to the mean. So I want to see a reversal such as we've got at the moment on this chart, which is the pound 1 minute chart. But I'm actually not in the right zone. Uh, I would need to see confirmation of that if I was in the right zone. Um, I'm actually in the middle of a range, and I don't want to be in the middle of a range. But actually, we might trial this one. We'll see how that candle closes. The idea will be if we've got an oversold situation like we had here, we got a bullish bar, then we got confirmation of that. That's where I would enter and put my stop loss below the swing. So we may be in the same situation here. I'm not going to take the trade if the bar is not bullish. Okay, so this is at the moment is a reversal bar, so I wouldn't be trading that. Right now, it's not a reversal bar, so I probably would be trading that. It's also 1 minute before the Open of London session, so a little bit dangerous to be trading at that time. So I'm not going to take this, even if it does set up until London session. But here's where it would be: I would be entering here, and I'd have my stop loss here, and I'd be targeting 1 to 1. So that's the idea. Hopefully, this will pan out over the next few weeks, and we can prove that it works more than it doesn't, and we'll turn that into a system. Ash is going to trade it in a different fashion to me. He's going to trade, I think, the FTSE and the DAX again on the 1 minute chart, and he's using an entirely different. Well, yeah, I think he's using crossovers. So he'll be doing that for you when he comes into the room very, very shortly. Why has my chart stopped moving? Oh, there we go. Because the candle was not doing anything. Righto. So has everyone got my idea? My idea is to find something that's overbought, like here. Wait for the reversal. Get a confirmation. and then trade short. So short underneath that one and stop loss up here. Long after the confirmation above that one, stop loss here. And there you go. That would have been a winner had we taken that trade. So, interesting, hey? What do we think of that, guys? Is that a good idea? It was going to keep you entertained, if nothing else. But we figured that just Ash and I talking all the time without actually placing orders into the market was getting a little bit tedious, and we thought we might try and get a few more people in the room. So by doing this, we hope that's going to be the case. So once that's gone its distance, game over. You just get out and wait for the next setup. So the pound has done its thing. Let's see what gold's doing on the 1 minute chart. Don't see any overbought situation. Don't see any oversold situation at the moment. But again, here's the idea. So got an overbought situation here. We got a reversal bar. And then we got confirmation with a second reversal bar. Sorry, we didn't get a reversal bar. We got a bearish bar. If I was calling that a reversal bar, it's actually a low test bar going the other way. It's red. Let's decipher them that way. So we're looking for a red candle after the oversold signal. Then we've got a second red candle which closes on its low. That's good enough for me to take the order. Trade it here. Stop loss here. 1-to-1. Get out. Very, very simple. Same here. A little bit overbought. Got a reversal bar. Can't trade that. Got to wait for the confirmation. There it is there. There's your confirmation. Enter here. Stop loss has got to go above the swing. And 1-to-1, get out. We will look, if this works the way we are anticipating that it will, then we will be looking at far bigger rewards than 1-to-1. But we feel for now, just to get everything nice and simple, we'll keep it at 1-to-1. So nothing happening on gold. Let's go back to the pound and see what's happening there. Continuing. Well, this is not so great if you are waiting for, well, to be super if you were getting 3, 4, 5, 6-to-1, which it appears to be. But what really is going on here is we're building another situation where we'll be able to trade it because it's getting overbought, right, on a 1 minute chart. So once it's overbought, we look for the reversal, as in here. Then we wait for the confirmation, which is this one. Enter here, stop loss up here. So let's wait on that and see if we actually get something that's very, very similar. I suspect that that may be the case, but of course this could just keep going.
Well, I've got a trade on the FTSE, mate.
Mate.
Actually,
days.
give it. So this is the problem with it with the speed of it all. Let me just see if I can get it on. It's long.
Mate, I'm
FTSE long at 38311. Let's bring this on the screen.
So I've told everyone we're not trading this, but
we're going to log it down.
We're going to demo it next week because we don't really want people to be taking these trades at the moment because we're not proven.
No, we are going to. We're going to kind of do a test. It's a test. I mean, a genuine sort of studied setup. So we got long at 83.11, which is just there. Stop loss is going to be down at the bottom now. It's going to be a 1 to 0.5 trade. So we are targeting 6 pips, which is going to be just about here. 311 to 317. There. So we're targeting that. Let me just double check that that is the right one. So stops at the lows, actually is 13, so 6.5 pips. There we go. Yeah, stops at the lows. Entering long here. And we're going to look for this target here. Let's see what we get. And it's just, you know, see if we can sort of like churn these out and make it nice and quick and nice and fresh. And I will log, as I said, I will log these trades down. I think the next step for us is to kind of get this on a demo account so we can, you know, see what's going on, genuinely see it, and then from there we'll probably have kind of better metrics to show everybody and sort of, you know, so we'll be able to sort of see the profit and loss just a bit more clearly.
100%. What are you actually trading here? You're trading the higher low. Is that the situation?
Yeah. So let me explain the trade then. Yeah. So what I'm looking for, if with my ones, is effectively a breakout. So for it to be a breakout, it's not quite there yet. There we go. So we would have got profit on that one. So the idea really is to look for a range to start with. So you know, this whole area here would be no good. So I'll be looking for a range to form to start with. And ideally, you know, the rules, I suppose, maybe it might even be worth writing the rules on the screen, you know, for this. So
That's
there
a
will
winner,
be
right? You're done.
what's that, mate?
That's a winner, right? You're done.
That's a winner. That's a winner. Yeah, yeah. So we got an early winner for this one. So this will be, these are the rules. So
This
the first
is
thing
absolutely
is,
known as scalping, by the way, guys.
yeah, this is scalping. So we're
unashamedly
just sort of, yeah, we're just trying to make this show a bit more interesting, you know, and rather than sort of like, you know, because I think both you and I have sort of moved on to longer term time frames. I mean, I do trade the 15-minute chart, but you still sometimes there's just nothing to do. And this is ultimately a trading show. So I think we if we can sort of, you know, take a few trades and discuss the week's events as well, then I think we'd be in a much better place. So we're going to sort of turn it into a scalping trade aspect. The trade aspect of a show will be scalping, and then we'll talk about the bigger picture as the session goes on as well. So firstly, trades not before, and this is for me, you know, obviously sort of if you're trading in Asia, it'd be the same thing. So UK Open.
Okay, I've got one on
But if you
pound
trade
and on
in
gold,
Asia,
I think.
go on, mate, take it, and we'll come back to this.
Too late.
Too
That's
late.
going to be
Okay.
the problem. Gold has already
Yeah.
gone.
No problem. No problem. We can talk about the trade after. Let's at least let's write it down. We'll talk about it straight away after. So trade's not before UK Open. So this would be no good because this is at 6 a.m. my time, and the UK Open opens at 8. That's the one thing. The second thing is that looking for a range.
Franchise model. This incredible journey.
Oh, what's that?
I don't know.
And then a breakout of the range and retest. Okay, so looking for a range. So this is our range. There's the breakout. So this is the signal bar here when it comes back. Didn't come all the way back, but it came back. So looking for a retest of this area, and then take the trade. Now, obviously, even though the bar closes down there, this is going to be where you're going to get in because of the swap, because of the spread. So you won't get in right at the low. You're going to get in. You're going to get in a few pips away. That was at 383.9. The spread in the FTSE is around about 2.5 pips. So you're going to get in sort of this area here. And then the stop goes to the low of the range. So 3 is stop at the low of the range. For target 1 to 1. Sorry, 1 to 0.5. And it doesn't matter what happens after. That'll be a different strategy if we take it on. Now there was one more thing. What was it? I can't remember the last thing, mate, but that'll get us started anyway.
Okay, cool.
So they're the rules. Yeah. So nothing before the Eco Open. Look for a range, a break and a retest. Stop at the lower of the range or the higher the range if you're going short. And the target is 1 to 0.5 to 1.
Right, I'll show you the
setup. Tell you what, the last thing was, it is a 1-minute chart. It's going to give us a heart attack. There we go. Until we get used to it, we'll be all right.
Right,
Yeah.
watch the replay if you haven't got it all. Okay, here I go. Here was the next two setups. One on gold, one on the pound. This one is gold on the minute chart. You got the reversal bar, you got the confirmation. So you would enter here, you would put your stop loss here, and currently you've got a lower high on that. That looks like it might be interesting. Let me put those levels on the chart. There's your stop loss.
Incidentally, Jeff and I are trading slightly different methods, so we're basically going to test both of them, right, Jeff?
Yes. Yep.
Yeah, cool.
There's
All
your
right, I'm going to
entry.
make 2 sheets.
This one's in danger of losing, and of course they're not all going to win. That's for sure. And your first or your target in this case would have been there. The pound, however, there was your reversal, there was your confirmation. So entry here, stop loss here, and that just powered through the first take profit. So both of those on the pound would have been winners had we didn't take the first. Sorry, we wouldn't have taken the first one because it was just before London Open, but it was a clear winner, and so was the second one. So the pound's winning so far. Gold, let me see how that went. That's out. So that's a loser. So entry there, stop loss there, just been hit, and your target wasn't met. We'll continue to monitor that one, of course, in case it does set up again.
Great stuff, mate.
Pound. Well, it's no longer overextended. We need to have it outside of this range now. So we'll need to wait for a bit on that one. And again, if you've got any questions on what we're doing here, please don't hesitate to put them in the chat box.
Yeah,
You
good
got
stuff.
anything,
I'm just making a note now of the trades. Now, incidentally, Jeff is going to follow probably you're looking at the gold and the pound, right? And the euro, and I'll be looking at the indexes.
Yes. Reason I've chosen gold is because it's so volatile when
Yeah.
it does move, and that's what we're looking for. And of course, the pound in London Open is also quite volatile. So I feel they are the two that are the ones that I want to watch anyway. Look, we're going to evolve this. It's not going to probably stay as we are at the moment, but if it proves that we're doing the right thing and we're going to make money out of it, then of course we will be sticking pretty much to what we're doing. So let's follow it and see how we go. I've got a few minutes. I might give you a couple of ideas from my analysis this morning, mate.
Yeah, sounds good, mate. I'm just putting together our spreadsheet. So when I've got
sure.
all I need really from you is the products, the entry, all that
Okay, I'll
sort
give
of
it to you
stuff.
now.
Okay.
The pound was entry 13393.
1.3393, yeah.
Stop loss 1.3398.
3398.
Target 1.3389.
And was it a
Or
winner?
88, whichever one. That one, yep.
It was a winner. Okay.
Gold.
What was the profit on that?
1-to-1.
1-to-1. Great. Okay. All right. So gold, yeah.
Gold, the entry was at 2658.
2658.
Stop loss 2659.
59.
And target 2649. Sorry, that's not right. 2657. $1, one whole dollar.
57. Okay. Winner?
And that lost. No.
That lost. Okay, no problem. Loss. So that's a -1.
Yep.
Okay, cool. And both those after 8 o'clock.
Yes.
Okay. When you get a chance, just give me the minute, and I'll note down the times as well, just in case we see a pattern on that.
Was actually 8 o'clock. Both of them.
8 o'clock for both of them.
Mm-hmm.
Great. Thank you, mate. All right, all in.
Happy days. Righto. So, if you were with me last week, you would have traded US dollar versus the Canadian dollar. Hang on, I'll put my right template on here. Sorry, you may not have traded it, but you would have seen me trade it. And what I was looking for off the weekly chart was a sell off this bar here, which of course was a lower low, lower high off that big bearish engulfing bar. And it looked like we're off to the races there for quite some time, but things changed. We, of course, got our first, well, in fact, I took 2 lots of profit here and moved my chart down to the daily and traded my stop right down to here. As soon as I saw that bar form, I felt that one of 2 things was going to happen. We would resume with the momentum, or that would reverse, and that's exactly what happened. So we got first profit, no problem, which was here, I think. Then we kept trailing our stop till we got to here. So that one worked. The other one is still in the market, pound versus the Swissy. And what did we trade last week? We traded... Wish I could see it. They've been on the daily chart. You guys may not have been. No, you guys weren't into that one. Okay. So we're still in that. That's in a little bit of drawdown. This week, I've chosen yen pairs. My goodness gracious. Why did I do such a thing? Because I felt that the yen in a reversal mode, as it has been, got a little bit of bad situation last week. Let me go to the yen, the dollar index and the yen index in particular. I'll go to the yen index first. I said this last week. We had broken with this, gigantic reversal on the yen, as we were all expecting at some point. And then we got a retest of the breakout, in my case, of this trend line. Then we pushed through the high till we hit this resistance level. And the week before, or the week before, yes, the week before, we had this shocker, which right in my world is really a retest of, when I say really, it is potentially just a retest of areas like that. So we've had the breakout of the resistance level, then we had that massive retest. And as I said last week, would not surprise me in the least if this is over time a classic A, B, C scenario. So I was already on board with that particular thesis. And then I saw this week on various, in fact, most of them, I saw first lower low that we got, first lower high that we got, which was game changer bar. Then we got a rally back to the monthly pivot. And last week we got another classic game changer bar. Now I tried to trade this pair last week under here, and of course we didn't make any headway. Had I traded that, I would have been triggered. But I chose, because I've got pound Swissy in drawdown at the moment, would have been the same trade. I chose euro yen, and that is also just triggered, and we're currently around about the entry level. But it's the same thing, exactly the same trade. We're going to take my first profit here if we're fortunate enough to get it. And all the yen pairs are the same. So I saw that across the board on the yen pairs. So I'm happy to take a position on that. It's super risky because the yen is so weak. It is still counterintuitive. One thing, it's also counter the major trend. One thing it isn't counter is the potential for the market to go risk off. In my opinion, that is very, very much on the cards. And if that is the case, then something like euro yen should benefit from that. Not as much as Aussie versus the yen would, but the Aussie's so hot at the moment, I couldn't really take that trade. But euro yen don't have any trouble with it. So that's the position I've taken. It's the only trade I've taken this week. There are a few that I do like out of the indexes, the currency indexes. I favor the Aussie because it's so hot. Is through, in my opinion, the resistance levels. I still favor the pound. The pound is still strong here. It had a little bit of a off its high late last week. I'm possibly data related, not 100% sure about that, but the chart's still telling me this has got plenty of upside. And the yen, for the same reason I explained before. I think this is a potential for A, B, C up here somewhere. So that's kind of where I'm at on the big picture, mate. And now I'll go back to the minutes.
Yeah. So just to kind of get you sort of up to date on the stuff off the chart, you know, fundamentals and COT and everything else. We're in a situation where the dollar tends to weaken kind of later kind of in October, but this week tends to be relatively strong. That's the first thing to note. Now, whether that plays out is a huge question, because one of the reasons the dollar tends to do quite well in September is that there's not, it's very rare that there's a rate reduction, never mind a bumper one, which is an unexpected rate reduction. So the dollar may not actually sort of find its seasonal pattern this year. That's the first thing to note, and it might be that it's a currency that we need to avoid if we are trading, you know, the charts off that particular information. The other notable things are that the Aussie is now thought of as a higher risk in accordance to COT data. So kind of moving on to the COT report. The COT report is suggesting that investors and traders and commercials are saying, like, now the Aussies at risk at these particular levels. Now that doesn't mean it's going to turn around, but what they're saying is we don't particularly want to be putting in quite as many trades with the Australian dollar at these particular levels, and that reduction of purchasing of Aussie dollars may well, you know, eventually provide some downside for the Aussie dollar. So Aussie dollar is relatively weak. The pound is also weak. And the yen is incredibly weak when it comes down to the COT report.
That's three crosses off my analysis.
Yeah, but here's where it gets interesting. So the dollar is very strong. Dollar's the other side. The dollar, they're suggesting that the dollar is at attractive levels to start buying. You know, where we currently are. But where it gets interesting is the fundamentals, because the fundamentals flip the picture a little bit. The pound is actually one of the stronger. When it comes down to the economic picture, the UK's economic picture is one of the strongest of the ones that we kind of look at. As is Japan. You know, we still see, you know, but you know, due to what kind of drives the currency market anyway, we're still seeing inflation in Japan, and a completely different picture that we saw, you know, even back a few months ago. So Japan is still strong, and actually the United States is pretty strong as well. And yet we've had this interest rate reduction, you know, a bumper rate reduction. And I think the reason it's caught the market by surprise is because it didn't seem necessary for them to cut quite as heavily as they have cut. Now, whether they go again at the same rate next time around is you know, going to be a question of how brave do you feel, Fed? Because they didn't really need to go. From what the data is suggesting anyway, they didn't seem to need to go to 0.5% rate reduction this time round. Are they kind of getting the taste for it and sort of thinking, actually, let's just go all in? Or will they maybe sort of like come back and say, actually, you know what, we're still going to reduce rates, but we're actually going to go now. We've done our big one. Now we're going to start kind of going at a little bit more of a gentle pace, because there's still some tightness in the economy. There's still tightness in the labor market, and we don't really need to kind of go quite as fast. Now, if that's the case, if that was to happen, that would suggest the COT report, which is bullish on dollars, is probably right. Because what they're saying, what the COT report is saying, is that the dollar is getting quite cheap down here, and the market has probably miscalculated the rate reductions that the Fed are going to actually achieve. So if the Fed don't cut rates, or they only cut by 0.25%, that probably strengthens the dollar. That probably sort of like brings the dollar up a bit, and that kind of brings the COT report into play. I guess the COT report's also saying that the Bank of Japan are unlikely to do anything else, even though inflation is still running sort of, relatively hot. They're unlikely to do anything else. And if that's the case, then yeah, we could see some yen weakness. And I think that the COT report is also saying that the RBA have not done enough. That's really what the bottom line from, to kind of put it into parlance that we can understand. The COT report saying, RBA, you need to do something. You haven't done enough. Fundamentals from Australia are quite tepid. They're not awful, but they're not brilliant. So they're quite tepid. There are sort of signs and signals of some weakening, and they need to act. That's what the COT report is probably pretty much telling us. So then it's just waiting for those things to happen, and it's reading the data as it kind of comes in to suggest whether they will do that or not. Weakness from Australian numbers will, push traders towards selling the Aussie. Maybe some strength in the US, which we've still seen actually, sends us towards some strength in the dollar. And the same with the yen. If the yen sort of does eventually start to cool, if the Japanese numbers start to cool a bit, then we might see some weakness with the yen. So until that happens, really you have to follow the fundamentals, and the fundamentals are good for, are bullish for Japan, and they are, bullish for the pound as well. So so that kind of gives us a little bit of color around what's kind of going on, in the market anyway.
Okay, I feel a bit better. I'll just explain this one away. This is gold on the minute chart again, and we did get slightly overbought, and we got a reversal bar, but we didn't get the backup. We've got a low test bar sitting there on that support level. That's why I wouldn't take that trade. But if we get a confirmation underneath this high, then I may well take it. I want to see that level broken first before I took it, but that's still a possible to go short there on gold. Pound in range, so not interested in the pound at the moment. It needs to either get down here or get back up here somewhere, so I can't trade that at the moment. How are you going, mate? Anything setting up?
No, there's I think the likelihood is that we may only get one thing a day. I don't know whether there's going to be sort of anything else. I think one interesting one, and I'll show you this. An interesting one is probably going to be coming from Germany. So we've looked at the FTSE, and if we'll probably sort of like start flipping our attention now to the DAX, and I'll show you why. The DAX is this one here, German 30. So right now we've got this breakout, and there was probably not enough. You could maybe say that was a retest, but it was very, very shallow. Then we've come all the way back and we've kind of retested the level. But if you kind of got in here, well, you'd be okay, 25. Yeah, that would have been a winner actually if you taken that breakout. But I think this one may well be more interesting now. So really, what we're looking for now is the range, and the range looks to me like it is possibly this. It looks like we've got this kind of going on. So I wonder whether this might be more interesting now. Let's see if that's any good. No, that's no good. I wonder whether it might be more interesting now to see this one to the downside. So a break below this area, and then look at it short. And the reason I'm saying that is because there is some economic numbers coming out of Germany in around about half an hour. And that's much more likely to kind of push this market. Whether we want to be in front of stuff like that on a minute chart is going to be something that we're going to need to explore. But I will probably wait and see if there's a setup. Then there'll be one to take. But I'll be interested if this does close down here. But it's still ifs and buts at this particular point. So there's nothing really to do. It has kind of stepped into this range, and I think that this is going to be the interesting sort of aspect of this one here, this range here. This is going to be the challenge for this particular method. This here is really clear. You know, as a trading range, it's really clear. There's horizontal. It's nice and straight. This one right now is not. You know, if we sort of like, you know, use the same kind of idea of the pattern and sort of like try and make them straight, you could be looking at that. But without that second touch up there, it's not really that well defined. But if we consider that this first one, you know, it did take nearly an hour to form this first one.
Gold
Now
set
we're
up
only.
again.
Oh, cool.
So
You say?
we would have been short at. Ooh, let me give you the level. Short at 26.59.
26.59.
Stop loss 26.60.
Okay.
Target 26.58.
Great stuff. Is it finished or is it still going?
No, it's still there, man.
Okay. All right. And that's literally just now. So that was at 10:30. Sorry, 8:30.
Very close to target right now. Just hit it.
Great stuff. Okay, so we've actually got 2 wins and a loss on gold. So we're 1% positive on the method you're following right now, and 0.5% positive on mine. So 1.5% up on the session, which I think is pretty good. But I think we need to wait on some of these other bits and pieces, mate. So shall we call it? I mean, it's 8:30 and play George's video. How does everybody feel about that? Or are there any questions in the room or any other comments in the room? Let me just have a look. I've got something here. Morning, Lewis. How are you, buddy? We're just sort of trying out a slightly different method here, mate. We're just doing some scalping for the show, just to kind of make it a bit more interesting for both of us and everybody else. And it's working out. It's worked out well this morning, mate, which is great. Nice little start, anyway.
So far, so good, mate. Yes.
But if there's nothing else, if nobody's got any questions or no comments to make,
maybe before you go to that, maybe I should just explain that trade. Do you think?
Yeah, for sure. Yeah. But get it in. Get it. Take the screen and let's have a look. We just want a bit more of a racy show, Lewis. You know, I mean, we're still going to talk about the stuff that is going to move the market for the week, but you know, let's just get some trades done as well.
Okay, so I explained that gold got into the overbought situation and gave us a reversal bar. Then it gave us a low test bar, which I said I wouldn't trade, and I wanted to see price close below that, which it did. So that gives us an entry there, stop loss there, target here, which it just hit. So
brilliant.
That's the simplicity of the trade.
Brilliant.
But don't be caught by that first reversal bar. You got to wait for the confirmation, and that's always
brilliant.
going to be the case.
Brilliant. Liking that.
My mic is too soft. Is anyone else having a problem with my mic? I guess if you're hearing Ash okay and not me, Lewis, then I've got a problem. I wonder why.
I've got you okay, mate. I don't know. My
Okay.
sounds. Yeah, my sounds all right. Okay. Well, let's call it then. We'll try again next week. See what we got for shaping up. Nothing else is giving me a setup right now, so I haven't got any more trades. And George has made a video as he tends to do for us. So we'll bring George in, and we'll see you guys next week.
Okay. Over and out, Brussels sprout. Have a wonderful weekend. Weekend. It's week, isn't it? It's Monday, Jeff. Get with the program. And yes, enjoy George, and we'll catch you next week. Hope you enjoyed that little session. It's interesting, isn't it? And I'll have to settle my nerves down now after the 1 minute on which I've never done before. As I said, it's just something completely new. So these old bones will just have to get used to it. Have a good week, and we'll see you later. George coming up.
Oh, I better make sure I'm sharing sound here, mate. 1 second. There we go.
Welcome to Trading Buddies. My name is
Yep,
George,
got
and
sound.
I'm
All
here
good.
courtesy of Jeff and Ash, who kindly invite me to be a guest on this show. I absolutely love it. Thank you, gents. Now, we are carrying on looking at 4 markets, and the purpose is to provide insights into price action, not just in these 4 markets, but hopefully insights that you can take and apply to your own trading. I've said in earlier videos, if you've caught up with them or watching them, I have taken out the EMA, exponential moving average, from here, and we're just looking at the charts purely on price action now. What this does is enables you to take these insights and overlay them with whatever strategies that you are applying, that you are learning. Or you can just go to your strategies and hopefully your eyes will open and start to see different things so that you can trade more profitably by adding price action to your analysis and your execution. So we have been talking about these 4 markets, and we're going to stay with them and see how much insights we get. So DAX 30, which is the same as the DAX 40. We had this high here, all-time high on this particular market. I'm just having a quick laugh to myself, guys. I will correct it next week because I've copied these slides onto PowerPoint. I can't hover off them and see what these levels are, but I know this is the all-time high on this market. So if we close, or whatever we close in September today, Monday, is going to give us the new all-time high. Now, here's what's interesting. We broke above this all-time high with this huge bull candle, exceedingly significant. And the reason I say that is we don't just have that all-time high. We have many levels here where the bulls have tried to accelerate up and failed, and the bears have repulsed them.
That's ridiculous. We need a referral letter.
It's a sell-off here that was in the beginning of August, but the bulls have been relatively strong. So when the bulls saw this popping up on Thursday, I mean, if you're a bull, huge excitement, because you might have decided to jump into the market anyway here, thinking like a huge breakout pullback high one, or just looking at this here, inside candles, market double bottom, good enough pattern for us to buy. If you're gonna buy, of course, I would always put a measured move stop of the pattern beneath here, and really, in fact, I don't just put a stop beneath the level. I always want to put a measured move or find another level. So you could have put a stop here and just be holding on to it. And when you see that kind of failed breakout, or your stop comes up and you tighten it and hope for more, and you'd have been rewarded. So bulls probably have pulled the stop up to here if they were in the market already. If I was not in the market, and I saw that, there's no ways I'll be buying that straight into the level of resistance. Buying down here would make sense because you kind of think, well, even if I put a measured move stop, at least I can get a 1-to-1 and be able to manage my trade out. But buying smack bang into a level of resistance, probably not wise. But if you then saw that, what you do as a bull, if you're an aggressive bull and you want to buy a breakout, well, you buy that. But, well, not but, questions, where do you put your stop? Okay, probably the most conservative place to put your stop would be just below this higher low. I say most conservative. I would just look at it and say, beautiful breakout. I'm going to buy the breakout, but I'm going to put a measured move stop, the height of this candle. So stop will be somewhere down here so that if it fails and comes back the next day, I can get out and lose half my original risk. That's perfectly fine than to put the stop there and then just get taken out. So having seen that, I would then pull my stop up to here and just hold and see what happens. So that's what a breakout trader would do. But if you're not buying breakouts, like you always say, just wait for a pullback of sorts so that you can jump into the market. So you might have seen that and say, hey, I'm a breakout trader, take my trade, put the stop measure, move down here, I can manage my stop, fantastic. Or I'm gonna wait for a bit of a pullback, you get that. Fantastic, you can take that trade, put a stop here, and you would have been nicely rewarded. So the same kind of thinking, up here, if you're not buying the breakout, wait to see what pullback we get. We might just fail and just continue to come down, in which case bulls get out and bears wait to see bear strength and decide how to jump into the market. So there you wait, see bear strength, decide what you want to do. If you want to trade the breakout, same story, breakout, put a stop where about here and manage it. Wait for a pullback. You don't get a way to get in, but then you don't get stopped out as well. Okay, next market, UK Brent. Look at this. We spoke about this last week and we said actually if the bulls were strong, they could just carry on in a tight bull channel. I think you recall that, and maybe then try and accelerate above that, which they did not do in this case. So bears came in and bulls created a higher low double bottom. So that's pretty significant for the bulls. If you are a bull, you say, okay, I can see the high low double bottom. I have two options. If I can take that trade on the basis that we failed to break out beneath this low, we now have higher double bottom. I'm going to use George thinking, do a measured move stop of this inside pattern. So stop is somewhere down here. If I am rewarded and the market goes up, I can tighten my stop up. If it fails, I can get out half the risk, whatever the case may be. That's one way to look at it. Alternatively, which is what I would prefer to do. I want to see confirmation of bullish strength. I want to see the bull starting to accelerate up. If I get a second candle and good enough strength, happy to take it, knowing that I'm going into this level, but I'm coming off the higher low double bottom and follow through. And I'm hoping that to get up there. Then you got to manage it tightly. If you don't want to trade those kind of early trades, you wait for bull breakout, pull back, and get in. Higher probability, less profits, but that's probably that would be if you want to trade that way, that is a very comfortable way to trade. Wait for the bull breakout, wait for the pullback, and jump into the market. Don't sell here, wait for the breakout, pullback, sell here, or breakout, pullback, sell here, instead of jumping into the trade. So ways to look at it. This is pretty good for the bulls, but if you step back again and say, okay, let's look at the bigger picture. The bears are happy because they're still creating lower highs, lower highs, lower highs. So the bears are saying, well, we're going to keep on selling. We're going to use a wide stop. Okay, so if you're a bear and you were selling and you sold here, your stop is probably going to be up here. And either you got out, wait to get in again, or you're just going to hold and say, hopefully, these guys don't break out above this and keep having lower highs. So we are in a trading range. Both sides have the opportunity to move. You got to use stops that are outside of the trading range. Or wait for confirmation of a trend if you're a trend trader and get higher probability in terms of your entries into the market. Silver, bulls try to get out, break out above here. We are talking about the high of May, way back here. When we were talking last week, we had this thick line saying bears sold off pretty solidly. If the bulls are strong, they have to get above this because that was a key level in terms of the bear selling of 3 consecutive bear candles, pull back, and they sold off to get down here. The bulls managed to do that, but they failed to have follow through, which should be saying to us there is a problem with the bull case. So if you had bought for any reason here, then you'd have to get out. Now, I kind of hesitate a bit because if you're going to buy and you saw that before this happens, you buy above the candle. So you would not have been triggered into it. If you had been triggered by a whisker, well, then I would probably just get out and just wait and see what happens. Okay, that's, if you're trading aggressively, I'm just going to trade every breakout. I had something here, I just buy and hold, I might get that kind of reward. That's perfectly fine, provided you use the correct stops. Okay, but now, a bit of a problem. Had this candle been a bear candle, man, that would have been very good for the bears because they've stopped the bull rally. They have controlled the failed breakout. and all they need is just to have a little bit of momentum. And by that time, you can consider starting to sell. You know, if that had been a bear candle, you could actually have said, okay, put a major move above that, you know, stop above there and sell. But being a bull candle, do nothing and wait. So let's see what happens coming week. Are we going to get trading range price action or not? If you want to get in the market, if we get a bear candle that closes on its low without tails, something like that, something like that, something like that, then you can put your entry beneath the candle. You know, if you did that there, beneath not triggered, then do nothing. Okay, you wait next day, okay, get in beneath that. So I would wait for a breakout candle with no tails beneath it to jump in. But the issue is your stop is still going to be 5. If you want higher probability, wait to see the bear breakout, like we did here, pull back and sell that with its own measured move stop, still make decent enough profit. But we have broken out. Remember, when we started, we were talking about we're in the middle of a trading range. We've broken out. We are at beautiful levels for something to happen. And if the bears give us a decent enough pattern here, I mean, the opportunity to sell, you might get something like this where you can sell, hold for, you know, a week or two and make decent money. If the bulls are strong, they have to give us breakout, follow through, boom, and then we go on. Euro yen, it's always interesting when you look at the daily chart and say, oh man, look at that. If I'd been in the market, I would have made money from there to there. It doesn't always work like that. Ever look at these charts or any yen crosses, you'll find that there was just one big candle, which was at the open of the London markets, European markets, etc., somewhere within there. So, you know, might not have been easy to take that trade unless using very wide stops, which you could still do, use wide stops and then manage and hold it through. But in any case, what do we do now? You know, it would have been beautiful for us if this had been a bull candle. Then we say, guys, look at this. We had a failed breakout with bull acceleration. Let's buy this market. But we did not get that at all. Had you, in any case, you would not have been triggered, but had you, for some reason, somewhere within here bought, let's say you bought here. This illustrates, you know, my point that always use wide stops. You're buying here, you know, even if you say, I'm just going to look at this inside pattern and look at the measured move, your stop is going to be down here. So when you get this surprise, you get out, lose half your risk. You know, I never use tight stops just at levels. I always want to use measured moves because I know as long as if my setup is a high probability, I'm going to take it. But the moment I execute it, anything can happen. The low probability event can happen, thing can reverse. So then, you know, let's manage. Let's use proper stops and be willing to manage. Where do I use wide stops, tight stops? Well, they're not tight stops. I mean, if I saw, let's use a proper illustration. Okay, let's say you trade this. You see the bears, and say, okay, that's a pullback. I'm going to trade that. Okay, I'm not going to put a stop way up there, but I'm still going to look at this and say I'm going to use a measured move stop. Okay, so I take a trade. If it reverses and comes back, I get out after risk. I still have enough capital to carry on trade. If it starts to accelerate down, then from up there, tighten the stop, you know, tighten the stop and follow through. So that's just, you know, the way I like to look in terms of price action. But there are other ways to put stops, of course. Remember, we are looking purely at the price action. Stops at technical levels that you can manage in terms of what to do. All right, traders, thank you very much. I trust you enjoyed, you know, what I've had to present. We will catch up again next week. Thank you, Jeff. Thank you, Ash. Enjoy your week, traders. Take care.